Humongous price movement in GME today, up over 25%. Why we do not think that trend's going to continue for the next few days, but looking out a few weeks, we think it will get much, much higher. Justin.
Bullish today, obviously. My guess, however, is that we will probably see a bit more of a bear case. Well, I think we'll see GME come back down. More on that in a second. But then once it finally comes back down and we queue ourselves up for the June cycle, then I think it's going to rip all the higher. So Josh, simply put, my attitude is short term, and I'm talking short term like 1 to 2 weeks, bearish, probably pretty bearish. But going out beyond 2 weeks, incredibly bullish. Look, I poorly understand the cycles, but I get the fact that when the people who are short need to run the stock, it generally works out best when they start from as lowest position as possible. I also get the fact that in addition to being short or long the price of the stock, you can also be short or long the volatility of the stock. So if we go back and look at the prior cycles as an example of this, and hat tip again to Pi-Fi for all the work he's done on talking about this, and of course others, my suspicion is that you will see it be in the best interest of those who are short to run the price down before they have to start covering their obligations. Again, simple reason being, when they start covering their obligations, they want to cover their obligations from the cheapest point possible. That being said, if they also have to cover obligations, they still want to make money, and so this is where they would theoretically, I guess, go long volatility. But if you're going to go long volatility, you want to go long volatility when volatility is not very high, meaning that you don't want IV and other things to be up there. Currently, that is not the case with GME. So this kind of leads me to my short-term bearish case. Again, this is all from watching other people who are far smarter than I talk about this stuff. If you see a drift down of GME, particularly in a way that doesn't spike IV, that I suspect, if the shorts could wave a magic wand and get whatever they want, assuming they can't get out of the shorts to begin with, my suspicion is that's what you would see. I'll also note this too, Josh. I haven't missed the borrow rate either. 100% from multiple sources today. Again, I see that as being very bullish. I think a high borrow rate is again annoying for the shorts, but I don't think it will actually prohibit the shorts from doing what they want to do. Said another way, the shorts might be constrained, which is good for our sake, and I think very good for a bullish take on GME, but that doesn't necessarily mean they won't have more shenanigans they can play. And this is where I think it's important for the GME bull case. If the shenanigans that shorts have to resort to are more and more, I want to use the word desperate, but there might be a better word than that, then theoretically that means the more and more exposed they are, because sure, they might be able to ram the price back down to, I don't know, 60, 70 or whatever. Okay, great. But at what cost? In other words, okay, they might win that battle, but in doing so, if you have retail FOMOing and if people buying options and they're not able to set up their entropy or manage, the volatility position, okay, well, great. They've jumped out of the frying pan and have landed in the fire.
Justin, let me take the contrarian view really quick, because borrow rates are skyrocketing and that is going to hurt the shorts. We are seeing a bunch of metrics that are increasing very rapidly, especially our last quarterly run up. We saw these metrics, but we've actually really proceeded them today at a very, very high rate. We are missing one drastic thing, which is option call volume. We'll get the data for today tomorrow and let you guys know with that. But without that extreme option volume, it's going to be pretty difficult. But I do suspect that over the next few weeks, especially with earnings coming up in the shareholder meeting, that we could have a pretty significant drop because earnings are probably going to be horrible. I personally am not owning GameStop because I think they're a fundamentally incredibly strong company. They're planning or they're projected to lose money this quarter, and I suspect they definitely will. But and that could absolutely tank the price of the stock, because this is where hedge funds and regular traders are going to come in and say, there's a horrible company, let's just buy some puts going into the earnings. Why not? Every other company's doing the same. Every stock right now is getting crushed on earnings. I do not suspect that GME is going to be differently. The thing is, with the shareholder meeting the day after, what will Ryan Cohen's move be? And then going into OPEC's June 17th with the quad witching, which is actually a very, very important thing, and that's when the significant FDD cycle really kicks in. So when Justin's saying he's bearish today and then bullish tomorrow, I would say his main case is that he's just talking about the next few days, like literally the next few days, and then going into like next Thursday, Friday, and onto like 2.5, 3 weeks out. I'm sure Justin's more bullish than any person on this live stream. There could potentially be some opportunities to play this. I know Justin picked up some puts today. I personally did not. I did sell some calls because I bought them very cheaply yesterday. And I do not plan on buying any puts either. But if IV does get crushed, which I do think it will, I'm going to buy a lot of calls before earnings. During earnings, I think GME will go down. I plan on picking up a very significant amount of calls. And then after earnings, after the share dividend split, or if we get a share dividend split, that's going to crush IV again, which I think will provide another great time for more leaps, and that's where I build a longer term position as well, even if the price of the stock's going up, because the option market kind of changes when they do a share dividend split.
Yeah. Josh, I would say there's also three other things that we should probably mention. And these are three, I would call them curveballs. They're not black swans, but just to consider. And I don't know how to treat that. The first thing is we have options and the annual meeting coming up. Theoretically, Cohen and GameStop could do some sort of blockbuster announcement. Maybe they do, maybe they don't. Maybe it's a blockbuster announcement and the market reacts one way or another way. I don't actually know the answer to this, but I do understand the fact that there's the potential that's there. So that's the first thing. The second thing is, again, just to touch very briefly on the borrow rate, the fact that we're going into the next, call it say the Q2, cycle with the borrow rate already elevated. And I believe, although don't hold me on this, I think XRT is still on the threshold list, but let's double check that. That is interesting to me because that suggests to me that I think one of the ways that they've been able to, that is the short's been able to kick the can so much, is that they have their favorite go-tos. If their favorite go-tos, or if they are precluded from going to their favorite go-tos, that seems like a thing very much in our favor. And the last thing I would say, and I don't know how to handicap this, Bed Bath & Beyond. I just don't get the cycle in that front. But again, my assumption is that Cohen is no, or I should say Ryan Cohen is no fool. Here's what I'm trying to say is, I don't know what emergent properties are going to manifest themselves from these three things. And perhaps they'll work in our favor, perhaps they'll work against us. Short term, midterm, long term, that I do not know. But Josh, to your take too, I am very keen on establishing, probably I'll target the August calls, would be my guess, and maybe pick up some more leaps. But I do think the sweet time, I think the shorts get their way. What I am planning on doing for myself is seeing if GME can get down low, because I think the shorts want GME to start low so they start from a low point to cover. And if you're picking up options, buying options, you want to buy these things when there's an incredibly low, or when IV is the lowest. And from the shorts perspective, I think that there's this eerie alignment of interest, at least for the short term. Now, going beyond the short term, there's very much a divergence of interest. But I think that if one were to try to figure out how to maximize their leverage and their exposure to the next quarterly run-up, that's how I would do it.
Justin, here's why I'm actually much more bullish about this cycle than any others. And the reason is because we're going to be starting from higher lows for almost every single metric. If you look at every single metric, it's going to be at a higher low. And that is, to me, very bullish. If you look at every single quarterly run-up, it's the start of that cycle is always at a lower low from the previous cycle. We've seen a drastic trimmer down with these quarterly run-ups going up. But with this cycle, we could actually start higher than we did the previous cycle from a price point of view, and from all the other metrics talking about the cost to borrow. If that stays extremely high, what will it be like? Let's call it late June. I mean, it could be in the hundreds for every single metric, like quite literally. And what happens to the stock at that point? What happens to IV? Because today IV was just skyrocketing. So since we're starting at these metrics higher than we have in the previous cycles, and there's more stuff going on in this cycle than we've seen in a very, very long time, especially, I'm very curious to see what Ryan Cohen says in the meeting. More importantly, though, what will that drive in the options market? Because we can't hammer down on this enough. Without extreme option volume, there's a very low chance that we see a MOA style event. And if that's the case, if we don't have the option volume, I'm just going to play the quarterly cycle and then get ready for the next one. But I think this cycle will be bigger either way if we see a situation where there's extreme FOMO. Let's say GME goes on reg show list, and then Superstonk comes back, and then a lot of these big players come back, and FOMO comes back in, and we see extreme option volume. That's where we could see a situation where MOAS really takes off.
One last thing, Josh. Unlike the last cycle in June, this time, to the best of my knowledge, GME is not releasing more shares into the market. Not to be confused with a split. There are no extra shares coming into the market. So that's arguably one of the things that put a tremendous, I think there's an argument to be made that put a tremendous damper on the amount of run that we would have had back in 2021. And again, I do not believe this will be pertinent for 2022. But again, here's a good example. This might be a curveball that comes up at the annual meeting.
What are you guys' thoughts for the coming weeks of GME? Thank you.